What up, NGB the gang? You already know what's going on. It is your boy, NGB Jordan, back with another episode of Business News, and I got some good to give you today. I got the gold to give you today, people. We are breaking into the castle. We are getting the gold, and we are out. We are Scooby-Doo, Jimmy John sandwich, running to the pack. We are running to the bag. Now, what do I want to tell you today? What goal do I want to give the people today? What I want to talk about today is the 5 most important things that I've learned in my 5+ years of trading. Now, I've been trading for a while now, and a lot of hardships have come out of that. But through those hardships, I've learned a lot of great things that have helped me to become a better trader every day, every week, every month, and every year out. So I want to talk about those things, people, because as you know, trading it's a marathon, you know what I'm saying? It's not a sprint. You got to learn a little bit more as you go. And as you learn, you keep improving week after week, and that keeps making you into a profitable trader. You don't start out and just become a profitable trader. You don't just start out and, you know what I'm saying, and you're all of a sudden Warren Buffett. That's not how it works. Just like anything, you improve. You go from your middle school football days to your high school to your college. That's when, you know what I'm saying, the girls and all the fans start coming in, but you can't let it get to your head. And then next thing you know, you've elevated all the way to the pros. And now you're in the NFL running it into the end zone. And I want you to reach the end zone, people. So I'm going to tell you how we can get there and the 5 most important things that I think that we should consider. These are not traditional things that most people on YouTube will tell you, but I'm not a traditional kind of YouTube Forex stock trading guy. I'm not a guru. You know what I'm saying? I'm not claiming to have this all-time knowledge. Trading is a hard game. I think only about 3% of traders are actually successful on the market. So let's go ahead and get into it, people, because you know I don't like to waste your time. The first thing is trading psychology is more important than technical and fundamental knowledge. A lot of people out here will tell you, hey, well, as long as you can read a stock chart, as long as you got the news, as long as you can find the best news, then that's really what will make you a good trader. And at first I thought that. I was like, oh man, I've got the best technical analysis in the game. I can see these ascending triangles, these bear flag patterns from a mile away. I know exactly what's going to happen because I can see the chart. I'm getting the news quicker than everyone else. This will help me out. And I struggled for a few years, and it wasn't until I realized that trading psychology was so big that I was finally able to reach more trading success. I started picking up trading psychology books, which helped me a lot. Now, why were these psychology books so big? Because a lot of the reasons that people have in trading is, yes, they can read the charts. Yes, they can, read the news and see how well a stock is going to do. But after that is where they start making their mistakes. They're holding on to stocks too long. They're not using stop losses. They lose a trade, for instance. A big problem I used to have was I would lose a trade, for instance, and then that would cause me to start breaking rules and then start entering more trades. And next thing you know, you got losses on losses stacking. You know what I'm saying? We need a word for that, where you literally trade, you take a loss, and now you're trying to get your money back. You're like, I want my money back. But when you have good psychology, you understand good trading psychology, you don't make those types of mistakes. You understand what I'm saying? You know how to hop into it. Let's say you're day trading, for instance. You know how to hop into a trade, get exactly what you need, and you have the mindset to get out of that trade, maybe relax for the rest of the day, maybe not continue trading, because that's what traders will do. A big issue with traders is over trading. And if you have good trading psychology, you can thwart some of these things that will really hurt you just by having the right mindset. So people, don't underestimate the power of having a strong mindset when it comes to trading. I believe that trading and having a strong mindset is a lot bigger than being able to read the charts or being able to get good news, because even though you may be able to read a chart, you may still hold on to a trade too long. You know what I'm saying? Or you may let your wins get to your head. You may let your losses get to your head. And that was a big lesson that I needed to know. And that was a big thing to help me on the way to becoming a profitable trader. Now, the second thing that you need to understand, and that I learned, is that losses are more important than winners. Now, it sounds a little crazy. It's like, what are you talking about? I got to get these wins. I got to get these gains. You know what I'm saying? I got to get big, strong. How can I build my account if it's based on losses? That's not necessarily what I mean. What I mean is this. there's a lot more for you to learn through your losses than there is for you to learn through your winners. I know we've all had those winners where it's like, okay, I feel like this wasn't even a good trade. I shouldn't even have made it, but I'm happy because it won and now I've got more money in my account. While that's good, and while, I'm saying that does make you feel like you're the GOAT, it does make you feel like you're on your way to the top, it really doesn't do a lot for you from a learning standpoint. Now, like I said earlier, the best way to become a profitable trader is taking all of the mistakes that you have and minimizing them as small as you can. Get those things small, get them minimize that so you're making the perfect decisions all the time. And how do you do that? You look at your losses, you look at what you're doing wrong, and you try to, change the things that you're doing wrong. If you're only looking at your winners, there's nothing to get out of it. But if you're looking, okay, was I holding on to this trade too long? That'll really help you because in the future you won't be holding on to trades too long. If you're looking at things like, okay, I'm moving very good and I'm winning a lot of my trades in euro US dollar, but when I move over to AUD, I start losing a lot of trades. Then as you look back through history, you start looking at your losses, you'll say, okay, maybe I shouldn't trade AUSD as much because euro US dollar is more profitable for me. That's why it's really important to have a trading book and to keep a track of your trades, because when the month is up, you can look at all your losses, do analysis, and look, why did I really lose this? You can really see why did this happen to me? What kind of moves were I making? Was I trading at a particular time that wasn't good for me? Was I trading on a particular time frame? Maybe I'm better at trading on the 15-minute chart than the hour chart, or maybe the hour chart is more safe for me than the 15-minute. When you can look at your record of all of your trades and look at your losses, you can really minimize those. And obviously, if you're minimizing your losses, then you'll become a much greater trader. So think about it in that way. Another one is the stock market is not a sprint. The stock market is a marathon. You got to take your time with it. You know what I'm saying? You got to ease into it. Portfolios don't just, yeah, I know you hear all of this crazy stuff about, I made $1 million in one trade. I made $25,000 in one trade, but that's not actually how the market works. YouTube gurus and everything like that may tell you that's how the market works, but that is not how the market works. It is a marathon. Think about it kind of like an assembly line. You're getting a little money here, you're getting a little money here, you're getting a little money over here, and then by the time you get to the end, the finished product is then there. You know what I'm saying? If you think about it more as a marathon, it allows you to trade with a much clearer head, and it allows you to become more profitable in the end. As you know, it's a lot easier to do something like, hey, I'm going to make $10 every day, and by the time 5 days are up, I've made $50. That's a lot easier of a goal to have than to think, oh, okay, I just want to make $50 this week, or I just want to make $50 real quick. It's a lot harder mindset to contextualize, you know what I mean? That kind of thing. So for me personally, when I used to think about it as a sprint, I used to get into, you know what I'm saying, all of the penny stocks and stuff, trying to make all this money real quick. I want 10-15% in a day, and it was making my trading a lot harder. It was making it a lot more stressful for me. I was going to sleep wondering, oh my god, I hope this stock is going up, using tons of amounts of risk, because you know what I'm saying, if you're trying to make a lot of money in a short period of time, what does that open you up to? It opens you up to a lot of risk. You're essentially throwing yourself off a cliff when it's good. Just relax. You know what I'm saying? Relax, people. You know what I'm saying? Consider it. You're sitting at the beach. You're on the cruise. You're looking, because when you slow down, you can really look at the market from a very neutral standpoint, and you know what I'm saying, you can relax, see what's going on, see the mistakes that other people are making, not move too quick. Now, you know, if you're trying to make a good trade, the best thing to do is to sit back and think about it. You got to be patient. Patience is key in the market, and if you're treating the market like something that's going to be a quick money maker, you're not going to have the patience that it needs to be successful. And patience was a big thing that I had to learn to, improve my profitability in the stock market. Now, the next thing is, all news is not good news. One thing that I learned very, very early in the stock market is there are people who will put bad news out here. There are people who will even do things like get a whole bunch of traders or a trading community to buy into a penny stock. The penny stock goes up a bunch and then they start selling. You know what I'm saying? They'll tell you to buy the stock. You buy the stock. It's going up because everyone's buying it. And then as everyone's buying it, you know exactly what they're doing? They're selling it, people. So you can't trust all of this. Even things like CNBC, while it is good to listen to and it can be a good information source, a lot of that news you'll learn is very behind. It's very behind. And what I mean by that is if you go on CNBC and you watch it and you take your trades based off of CNBC, a lot of those trades aren't going to be good for you the next day simply because the news that they're getting isn't immediate. You know what I'm saying? They're getting in the news, they're doing analysis of it, and then they're spitting it out to the people. And think about it like this too. If CNBC really was, you know what I'm saying, such a great news source, or all of these news sources were so great, then that means essentially all you would have to do is go pull it up online, see what it says are good investments, you invest in them, and boom, everyone would be a good trader. I mean, everybody would be walking around with yachts, you know what I'm saying, new shoes, bust down watches, you know what I'm saying, VVS chains, but that's not how it is. And it's because it's not that simple, people. So a good thing that to understand is while news is good, it's good to look at. You got to understand everyone not only doesn't have their best interests at heart in this game, it's a slaughterhouse out here. You know what I'm saying? It's the market. For you to make money on the market, somebody else has to lose money on the market. So for you to lose money on the market, that means somebody else is making money on the market. It's blood sport out here. I don't know why everybody seems to think that trading is some kind of thing where we can all win, because that's not how it works. It's a very competitive game. It's a very competitive market, and you have to understand that. So one thing I had to learn was not to trust all news. And the best way you can handle this is you look at the news and then you think for yourself. You do your own technical analysis. You do your own fundamental analysis. You do your own trading psychology, looking at how the stock's moving, how things have been moving in the history. And you just use that as kind of backup knowledge. You know what I'm saying? If somebody tells you, oh, I think this is a good trade, don't go based off of what they say. Go do your own research, your own everything, and then possibly decide to make the trade or not, whether based on whether you think it's a good idea. And that was a big thing that I had to learn. Now, the last thing is having different accounts for different purposes. When I first started trading, I had one account for everything. I had one account for my long-term trades. I had one account for my short-term trades. I was trying to trade Forexes and futures and ETFs and all of that all in the same account. And it really hindered my trading. Why did it hinder it? Because my money was being used in different ways that made it hard to, you know what I'm saying, to centralize it. It was almost too centralized. If I wanted to make day trades, sometimes I wouldn't have the money because of a long-term trade that I have. And then what would I do? I would close out some of that long-term trade so I could have money to day trade from. And that's not a good way to think about it. And it also just makes things more jumbled up. It makes things more complicated. But now I have one account that's dedicated strictly to long-term trades. And that helps me out a lot because I'm not trying to grab that money and throw it into other places. When I go into this account, I'm focused in simply on looking for these particular types of trades. In my long-term account, I'm looking for trades that I can hold for 3 months, 6 months, a year. When I'm in my short-term trading account, I understand that with that money, I can utilize a little bit more risk because it's short-term trading. In my Forex account, I'm focused primarily on Forex. Dividends or index funds account, I understand this account is meant to just hold money primarily so I can get dividends out of it, or this account is possibly just for me to hold for 60 years. And having all of that in one central account can really hinder your trading and make it hard to be profitable because it's just too much things. Like I said in one of my earlier videos, there is a such thing as too much information. You want to make trading as simple as possible. You want to make it so like Patrick Star could do it, you know what I'm saying? And the way to do that is to make it as easy as you can as you can for yourself. And part of doing that is understanding, what account you need for what certain thing. Everybody has to play their role, and that's how you win at the game. In a football game, the quarterback can't also be the wide receiver. He can't also be the lineman because he's good at being the quarterback. You want to let your short-term accounts be good at what they're at and be short-term. You want to let your long-term accounts be good at what they're at and be long-term. And that was one big thing that really helped me to cut down on my losses. Now, I hope you all have a great day. Like, comment, subscribe. I appreciate all the love you guys have been showing my channel. By the way, at 200 subscribers, I'm eating extremely spicy Buffalo Wild Wings wings. I'm ready for that. So you all have a great day and be blessed, people.